Donald Trump's tariffs on imports of metals took effect Wednesday. They imposed 25% duties on shipments of steel and aluminium, with no countries excepted. The tariffs also hit hundreds of products made from the metals, from nuts and bolts to bulldozer blades and soda cans. Within hours, the EU fired back with $28 billion in reciprocal duties. Those tariffs will kick in from the start of next month. Canada is also mulling how to respond to the latest moves. Speaking Tuesday in Houston, Texas, Energy Minister Jonathan Wilkinson said Canada could limit sales of oil to the US.
But when we're talking about sort of non-tariff retaliation, it could be about restricting supply. It could be putting our own export duties on products. It could be energy and minerals. It could be broader than that.
Canada is the largest supplier of imported oil to the US, shipping some 4 million barrels per day. Wilkinson says a levy on US ethanol is another option being considered. In Australia, the government was disappointed not to win an exemption from the new tariffs, something Trump said last month he would seriously consider. However, Prime Minister Anthony Albanese said it would be counterproductive for Australia to respond with tariffs of its own.
Tariffs and escalating trade tensions are a form of economic self-harm and a recipe for slower growth and higher inflation. They are paid by the consumers. This is why Australia will not be imposing reciprocal tariffs on the United States.
Other countries facing a significant hit from the Trump tariffs include Brazil, Mexico and South Korea. However, the new charges have been welcomed by a US Steel Industry Association, which said the measures would supercharge domestic production. Investors are less sure, with US stocks shedding more than $4 trillion in value over recent weeks amid concerns about the trade war. Donald Trump has defended his use of tariffs and dismissed concerns about market volatility sparked by the global trade turmoil. Speaking to a gathering of business leaders in Washington on Tuesday, the US president said his trade policy was already showing results.
We have car companies that are not building in Mexico now. They're building in the United States. Some of them, the plants were already started and they stopped construction, and now they're going to build in the United States. It was very unfair. They'd build in Mexico and sell them across the border with no tax, no nothing.
In the audience were around 100 CEOs, and some of them may be feeling growing unease. They've all seen some $4 trillion wiped off the value of US stocks in recent weeks, amid fears over the impact of the trade war. Businesses have also been concerned by the volatility of the tariffs, which have been variously imposed and delayed, raised and lowered. On Tuesday there was more of that, with turmoil over duties on Canadian metals. Early in the day, Trump said he would double levies to 50%. He was responding to a move by the Canadian province of Ontario to impose its own tariffs on electricity supplied to America. Hours later, Ontario dropped the move, and Trump said US duties would stick at 25%. The fresh day of turmoil drove another down day for stocks, outweighing glimmers of hope over a Ukraine ceasefire. More big firms, including retailer Kohl's, also warned that the darkening economic outlook was hitting sales. In the end, the Dow Jones Index closed the day down another 1%. But if that worries Trump, it didn't show on Tuesday.
The tariffs are having a tremendously positive impact. They will have, and they are having.
Trump said his tariffs would generate a lot of money for the US and could be raised even higher in the days ahead.